didn't see the plan, they didn't see the vision, but we came in, we saw the vision, we said this is BDC's specialty, let us support, and over time they're thankful that BDC was there to help them.
You're listening to the DORE Podcast, where we spotlight the people, ideas, and businesses keeping Ottawa running. From contractors to real estate investors, entrepreneurs to industry experts, we dive into real conversations and help grow everybody's pie.
Episode 47, Business Development Bank of Canada.
So welcome back to another episode of the DORE Podcast, where we talk to industry leaders, innovators, and local experts shaping Ottawa's real estate and property landscape. I'm your host, Dan Dore, and today we've got another fantastic guest joining us.
Thanks.
So we're sitting down with Shay Faisal from the Business Development Bank of Canada, also known as the BDC, an organization focused entirely on supporting Canadian entrepreneurs with financing, advisory services, and long-term growth solutions. So Shay brings experience working directly with business owners who are navigating expansion, investment decisions, commercial real estate, and the rapidly evolving financing market in Canada. So Shay, welcome to the DORE Podcast.
Thanks, Dan. I appreciate you having me.
Yeah, and I know you need to put a disclaimer before we go in, so I'll let you do your disclaimer, and then we'll get right into it.
Thank you so much. And for those listening, just a small, brief disclaimer. The opinions that I share here today are based on my personal experiences and views, and not of BDC and its positions.
Sounds good.
Awesome.
Now we
get started. We get started, right?
So commercial real estate financing, obviously I was saying before the podcast, I've been in business. I own properties. I've done property management. I own my own, real estate portfolio. I do commercial real estate. But I've never used the BDC. So as I said, I'm really looking forward to seeing how that differs from my experience in dealing with lending institutions. So
for sure.
BDC is, from what we can see, is known for supporting entrepreneurs beyond the traditional banking model. And from your perspective, what types of commercial real estate projects or expansions are business owners coming to BDC for most today?
So there's numerous projects we're seeing on the go right now. So, a few of them would be owner-occupied purchases. So when a business that's operating, a manufacturing plant or, garage shop or so on, it's a business that's, growing and looking to scale. A lot of business owners that have been renting for maybe 10, 15 years are looking to take the next step and build equity in the place that they work, in the place that their business functions. They're coming to us and saying, hey, we're looking to buy this building. We may not have access to this much down payment, or we're looking to preserve our working capital. So that's one aspect where BDC comes in. And BDC has a different perspective when it comes to those owner-occupied purchases. If the business is able to preserve that working capital and keep it in its operations, use it to, buy raw products or buy inventory or scale the business, they can have for an example, let's say it's $1 million purchase. Instead of having to put $300,000-$400,000 down towards $1 million purchase, they only put down $100,000 or $150,000. The rest of it can stay in the business, and you can, that with the inventory turning, with so on, the business can use that amount, with that working capital in the business, to then multiply that amount maybe 1, 2, 3 times over the span of the year, rather than holding it in that real estate and getting a return maybe over 5 to 10 years of that same amount. Okay. So one way would be, again, the owner-occupied purchases. And the second item would be investment properties. So that's where BDC also specializes in, is in that aspect. And so investment properties is where we would take the strength of the leases. Say you're buying a commercial plaza, we would take the strength of the leases of the tenants that stay in there, the length of them, the type of businesses that are there, and see if the leases would demonstrate cash flow to pay for this amount of the building over the span of 20, 25 years. Right? So that way, investors who engage in the real estate space, they're able to get, more or less leveraged financing to buy this commercial strip using the strength of the leases with only minimal down payment, right? And if a business that is operating and generating cash flow, if we take that business and take that business owner into a place where it's a commercial plaza and they can operate their business in a commercial plaza, then they can use their own cash flow and supplement it with the cash flow of the leases to then increase the amount that they can borrow to purchase this real estate. So there's different ways we can play around with the cash flow, and different ways we can find solutions for the entrepreneur to help them find out which way is the best way to grow your business And right now we've seen a lot of entrepreneurs that have been growing their business for 10, 15, 20 years that have been renting for 10, 15, 20 years, or that same space, and the rent has been going up every single year, and they're tired of it. They say, I want to manage my own property, I want to construct, I want to build. So, the owner occupied, either we help them buy or we help them find the land, help them secure that land, help them construct on that land. So especially in Ottawa, there's not a lot of industrial or warehouse space, and especially in the core of the city. So when you do find raw land that's available, maybe closer, just in the outskirts of the city, a lot of entrepreneurs jump on that opportunity to buy it, and then construct a building on that to then scale their business to the next level, right?
So BDC would actually get involved in a development project then,
In
if
development,
it's for end user.
if it's end user, for it's a commercial, industrial, if it's business and business case, right?
Yeah, because I don't think you don't touch residential.
We don't touch residential,
Right, exactly.
right? So
It's all
anything in the
commercial.
commercial space, so
Okay.
that we would definitely help out.
Okay.
Yeah.
So that's interesting. Yeah. So if I understand correctly, if an end user, you'll look at the strength of the business.
Right.
The asset has to be the asset, but the strength of the business seems to be
The strength of the business is always the cash flow is number one, what we look at. Since we're such a long-term partner, it's more or less secondary for us to look at the assets and what we're securing ourselves against, because BDC is more of a partner than we are a lender. We want to be there with you for the term of the loan. You may not know, BDC is a non-demand lender. So more or less what that means is when we provide financing, we provide it for the term of the loan. We don't say after 3 years.
So what is a typical term of a loan?
So it could depend on, if you're doing a working capital loan, it could depend. If it's real estate, it could depend on that. But let's just say real estate is 25 years.
Sure.
We want to stay with the client for 20, 25 years, the length of the loan. So after, let's say 3-4 years, a client is having difficulties, we want to help them overcome this difficulty. We don't want to say, okay, you're having some difficulty with your numbers, with your statements aren't as good. We think you should find another bank. We don't say that. We say, okay, you're having some issues. Let's bring in some help. Let's overcome this challenge, and let's keep you operating this business.
That's a huge advantage.
Yeah, for sure, and especially in COVID, when there's so many business owners that had to scale and shut down their businesses. When you're looking at hotel, resorts, and so on, you go from running a great business, great cash flow, to more or less nothing overnight for a year, 6 months, or so on.
Yeah.
So for those businesses, BDC had specific plans for each business, but more or less, we give a year off of principal and interest, so no payments for a year. We did 6 months of interest only when the business started rebounding, and then just added it on at the end of the term. So the business owner was able to say, okay, I don't have to sell this property. I don't have to sell my business. I don't have to shut it down at a loss. I can more or less have comfort over this year where my business is shut down and bounce back and go from there.
That's
So
interesting.
a lot, even though,
I can see. Yeah, because most lenders are not like that.
most
obviously.
lenders are not like that.
That's
So
right.
we have a different perspective when it comes to, we don't want to just come to the table and say, okay, you're not able to generate the cash flow anymore. You're not able to pay. You should sell the property, pay us out, and it's over. That's not our perspective. Our perspective is long-term, relationship based. Let's work and help you figure this out long-term.
Interesting. No, I can see. Yeah, that's you can see those scenarios you're positioning there. If somebody's looking to buy, sometimes they don't have necessarily the down payment or whichever, but they're obviously being able to show that they're paying this lease for all these years. So if you convert that same expense to a mortgage payment, then for the BDC the risk is minimal, and you've got security on the performance of the business. Interesting.
Exactly. So there's ways we can do.
So even if somebody's buying a commercial asset that's stabilized, you'll look at the strength of the leases and the tenants that are there, and you'd still move forward even if the lender, the borrower, is not moving their business there.
So then that would classify as an investment property. Then it would. So if the owner's not moving in there, it's an investment property. So again, based on the strength of the leases, if you can qualify the leases, and if you can qualify the tenants, then it's based on the leases strength and how much the NOI on those leases would be.
Okay.
Right.
Okay.
So
that's interesting.
So it's a great opportunity for people who are in real estate and who do have investment properties to continue to grow.
That's right.
And expand the reach, because there's a lot of commercial plazas in this space, right? Yes. And one of my clients, she was looking to grow her business, and instead of buying, she's an optometrist, she only needed one unit. And so we helped her purchase a plaza, and she took over one unit, and there was leases from the 3 other tenants that supplemented her ability to now borrow, where she couldn't have on her own borrowed this amount based on just her financials to now secure a property of this dollar value, because those other leases we were able to qualify and validate. We can add that in and supplement and move forward accordingly, right?
Yeah, no, and when you say you help them, are you suggesting you help them with the financing, or are you suggesting you're helping them finding the assets? Because it's not clear to me when you say we help them find the property. But are you actually suggesting, okay, well, we've got realtors, we have people that can help you find what you're looking for? Or are you suggesting that when you say you're helping them with financing and growth strategy?
So it's more or less, I would say, is more of instead of just us working with the client, it's we're working with the ecosystem. So a lot of times when the client brings us in, we're working with their realtor, we're on a call with their accountant, we know who their lawyer is, we know who their banker at a chartered bank is who deals with their line of credit day to day. So we come into that ecosystem and we build that partnership with everyone there. So talking to the realtor, okay, this is what I think they could probably qualify in this range, but if there's leases there, we could then consider. So having that conversation, you're an expert in real estate. If you give me a call and say your client's looking at this property, there's this amount in leases, and this is what we could possibly validate, I would look at the financials, put those 2 items together and say, this is what we could probably get to. High level numbers, just, in a conversation, say, maybe we could get to this with a high level look without, going into the specific due diligence. But then the conversations gets deeper. You say, okay,
there's an option.
There's an option. You're talking to the client. You're like, hey, client, this is a good opportunity to talk to Shay. We may be able to go further and actually secure this $4 or $5 million property.
Sure.
Because now we have leases that could support your cash flow.
Okay.
And so now we're working as a team to help the end goal, which is the client.
That's very interesting.
Right. So
that's very interesting.
So you end up building a really good relationship with the realtors, with the accountants, with their lawyers.
Absolutely. Because everybody
on the team.
We're all interconnected. Like, a realtor doesn't work without assets. Assets doesn't work without lending. Lending doesn't work without insurance. We all need each other in order to make this happen.
We have the same end goal, making the client happy and making our services valuable. And if we work together to provide more value, that's even better.
Yeah.
Right.
So that's great. No, that's interesting. And I know, BDC also has like growth financing strategy. So it's not just about purchasing assets or, from what we can see, if you have a business, you're looking to scale, BDC seems to be the right partner for doing that.
Right.
So what key factors do you look at when somebody says, they're looking to scale? Like what are those factors you look at to entertain assisting?
And there's a few big things that we take a look at. I'd say one big thing would be having a plan in place. When a business owner comes to us and says, I'm looking to borrow $2 million, just because it would raise a red flag, right?
Sure.
So we want to know why you want $1 million, $2 million. What are you going to do with the business? What's the end goal? What's the tangible result you're looking to do? How is this money going to be spent? And so once they start, fulfilling those answers, letting us know this is how they want to grow, we then align ourselves with the client. Okay, this is what you want to do with the business. You're currently at 10 million in revenue. You want to get to 15 or 20. You want to hire X amount of people. You want to grow the business here. You want to go to a new market. We start considering those aspects. And then we start looking at the financial statements. Can this business borrow X amount of dollars to grow the business? And how leveraged are they? Where are they currently borrowing? Who are they banking with? Getting to understand the financial landscape there. Who are their partners there? Are they just alone in this sort of venture, or is maybe the accountant or the lawyer playing a role in supporting the client? We like to see that they have a team around them, right? So when you have a team there, they're more skilled. You know that the likelihood of them achieving this goal is now increased, right? And so you start putting those different aspects, like do they have a goal? Do they have a supportive team? Do they have the financials to support it? And so you start putting all those items together, then the BDC starts to figure out where can we support? What dollar amount can we get to? How is BDC support well situated in this? And sometimes it's not. Sometimes it's maybe better to go with your charter bank, and we bring the charter banker in and let them know this is a better deal for the RBCs, the TDs, the CIBCs of the world than BDC. But we know where our specialty lies in when it comes to that growth financing. When it comes to my team on the financial services, we do the growth financing to an extent, but then BDC has another arm, or growth and capital arm, and they specifically do the growth financing with when it comes to more or less untangible like security, when it comes to lack of security, or when you're growing the business and you need access to $4 or $5 million unsecured, that team comes in. Or when you're transitioning, or you need a leverage management buyout, things like that, that team manages it fairly well. So we have a great team in Ottawa, very experienced, that does that. And our team specifically, we do a lot of the, you could say, real estate, the working capital, the equipment.
Right.
But on my side, we've had a lot of success stories, even with smaller amounts of working capital, where one of my clients that were looking to grow their business needed that working capital for that inventory injection. And at that time, there were only $3 million in revenue. We gave them, a few $100,000 working capital to get that inventory, to grow the business. To then the following year, they're at 4.5, 5.5. And so they've been with me for over 4 years, and now they're doing $16 million in revenue.
Wow.
And so it's amazing to see how that little help then grows, and then they come back, and you're like, how can BDC situate ourselves to then continue to grow the business? Now they grow a little more.
Yeah.
And over the time they pay BDC off. They're like, okay, thanks for the loan. We'll come back to you when we need you. And they'll come back maybe a year or 2 years down the line and say, we need to do this again. Can you give us X amount?
Yeah.
And there's been different aspects where one of my clients, they had a property, like they were on a quarry, but they didn't have licensing. So we gave them working capital to get the licensing, to get the equipment, to get whatever items they needed to start the active quarry on the property. And they used to subcontract that out, and the subcontracting costs used to be around $250,000 a year. Instead of subcontracting that out, they started selling the granular A, granular B themselves. It went from going from like 3 million in sales to then 4, then 7. And they were like, that injection helped them so much, because they weren't able to get it from anybody else, because the banks, they didn't see the plan, they didn't see the vision. But we came in, we saw the vision, we said, this is BDC's specialty, let us support. And over time, they're thankful that BDC was there to help them in these times.
I guess so. Or else there's because the charter banks won't
exactly
don't go into that.
And many times, even after they've paid BDC off over the term of the loan, I still get phone calls, and that speaks volumes, because they love the service. They're like, hey Shay, thanks for what you did. We're paying off this loan now, but we will need you in the future. And when I get that call 2-3 years down the line, they said, hey, thank you so much for what you did. Can you do it again? Can you do this? Or I'm looking to buy another business, or I'm looking to buy another property. What can you do for me?
Selling a commercial property? At DORE, we know how to attract the right buyers, price strategically, and help you get over the finish line and close. Let us market your asset the right way and help you get the returns you deserve. Visit us at doremultiresidential.com.
So I'm always you could say the first phone call when you build that relationship to that point.
Especially, if you played a role in making that happen, I can see why they'd reach back out to you.
Oh, for sure. And you feel good too as a banker. It's even as a person, you're like, I helped this business grow. You feel good, or you help them build. You see the results,
and that you played a very specific role, because let's not kid ourselves, without the working capital, in a lot of cases, you can't take advantage of those opportunities.
Exactly. And you feel good, or you help the business build the building.
Yeah.
When I go drive by and I'm like, I helped finance that building. And you're like, I played a critical role. It feels good, right?
Good for you.
At the end of the day. So it's the mission that
listen, we're all, most of us, that's what we want, right? We want to see things happening. So it's fun. I'm looking at the smile on your face. I'm like, clearly you want to do that.
Yeah.
And does BDC work like a charter bank? So if you get a loan, say for, a building, a stabilized asset, do you still have to have like a bank account with the BDC, or it's just a loan? Like because I know a lot of the chartered banks, if you get a mortgage for property, they want all of the all of it. They want the funds there because they use it to leverage for other loans. So
absolutely. So BDC is different. So BDC is only a project lender. So we don't have line of credits. We don't have day-to-day banking. We don't have credit cards. We don't have line of credits. We just have specific products.
Okay.
We have our working capital. We have our equipment. We have our real estate financing. We have our growth and equity team advisory. Like, we don't have that bank account. And so the reason why we don't is because we just want to come in, do that specific project and help that business scale. We don't want to do the day-to-day line of credit, the banking. We want the banks to continue to do that. That's their specialty. We just want to come in, do the specific project and help them. And we have a lot of banking partners from RBC, TD, Scotia that bring us into deals and say, hey,
that's exactly where I was going. I'm like, it's a perfect working relationship.
Exactly.
My understanding is whatever a chartered bank would take is not something you'd be interested in, and vice versa. Am I incorrect in my assumption? Or
I mean, there would be some overlap. I'd say likely maybe in the real estate side of it, and just because, I mean, real estate is secured assets, so a lot of banks want to be, associated with it. But outside of that, our working capital is a specialty. I mean, a lot of banks can't do what we do when it comes to working capital, when it comes to our growth and, transition team. I don't think there's a bank that can do it like us.
Okay.
And the expertise we have on that end. So we have banks pulling us in and say, hey, and a lot of times it's also because when entrepreneurs reach out and they have different term sheets, one from RBC, one from TD, and their home bank, let's say it's TD, TD doesn't want to lose the account if RBC is coming in a bit more aggressive. So they'll bring maybe BDC in and say, hey, can you do the real estate a bit more aggressively in how you would do it so we don't lose the client? So there's different games behind the managers have to play just to make sure that the file stays with the bank, because they don't want to lose the day-to-day banking, the line of credit, the deposits, and so on. So they want the bank to, even though they may not get the real estate, they want to keep the rest of it with them. They want to
keep the client,
right? And they keep the client happy.
Keep the deposits coming in.
And that's why we see ourselves as sort of an extension to all of these partners. Is if you want us to help your clients, we're here to help your clients, right?
Yeah.
We're here to make sure that they stay with you, and that's our relationship. Okay. That's our bond.
Yeah, I
can
right?
see.
But I mean, and exactly. And I think for the most part, from my experience, anyways, if they're not for the most part, the interest lies in a very small box for them. So if it goes outside of it, I can see where it could say, hey, reach out to BDC and
bring them in
and see what they would do. And
for sure,
that's awesome.
Yeah.
And I know part of what you do as well, there's an advisory and consulting support. So how does that work? I know we got kind of into it. Really much.
So advisory is a separate arm. So you could say there's three different arms in the bank. So there's our financial services, there's the growth and capital, and then there's advisory. So I would say advisory is almost like a well-kept secret, all you could say.
Okay.
And the thing is, a lot of
do share
on the DORE Podcast.
That's right, exactly. You heard it here.
You heard it here first, right? And so, and the reason I say it's a well-kept secret is because entrepreneurs don't always know about it. When they think of BDC or when they think of a bank, they think of dollars. And so when we come in with that different perspective, we don't think of lending first. We think of, okay, you're running this business. What are the bottlenecks? What challenges are you having? You're looking to grow the business, but you're not targeting the right segment. What's happening here? So having that lens when you come into the business, it more or less helps the business grow, right? When you more or less, you can't throw money at all the challenges you have in your business and solve them, right? So we come in and we assist entrepreneurs with that advisory arm. So we could do, let's say, sales and marketing. So Dan, why are you targeting this demographic? Why this age? Why this gender? Why this area? And we get to know that on a specific basis, right? Like, who are you targeting? Why are you targeting them? Is this the customers that will listen? Is this how you can grow the business from X to Y? Is there another market you could target? And so that could be sales and marketing, or it could be operational efficiency. Where does the bottleneck happen in the business? When you're doing these processes, who slows it down? Maybe when you're looking at like a restaurant or a pizza store, is there enough ovens to match the amount of output you need to have? Is there enough employees? Is there enough trays? So where's the bottleneck happening? Why is there delays happening? Why is there differences in the outcome? Why does each pizza taste different? So there's the operational, or is it strategic? Is the CEO, CFO, and the CEO aligned as to where you want the business to go?
Right.
Are the employees aligned with your goal as well, or does everyone want to sort of venture off and do their own things? Because when you have a well-oiled machine, everyone works towards like one unified goal. And when you have that, you get there faster and you're able to grow the business consistently, have consistent profits, have consistent outputs, and just have systems in place to continue to grow the business, right? And that part of that part of the bank is it is a fee for service, but it's on a cost recovery model. We're not looking to go out and charge clients significant amounts. We're just trying to cover the costs to more or less to offer the services, right?
Because and it opens the door obviously for other services. I'm assuming BDC can come in and say, I can help you with this.
And it's the ecosystem that BDC provides, right? It's that different look in our view in terms of financing, advisory, the growth capital. When you put all those together and you partner with, you could say, with BDC, you end up seeing that growth in the business, because more or less our mission at the end of the day isn't to have the most dollars made. It's to grow Canadian businesses. That's like BDC's mission. We have a sole shareholder, which is the government of Canada, and that's it.
Okay.
And our mission is to grow and continue to grow Canadian businesses.
Is that
And
right? Okay.
Yeah. And so that's our goal every single
Oh,
day.
yeah. I wish I should have read that. That's awesome.
Yeah. And so,
But it's so different, yeah, because the advisory, naively, I thought the advisory was something that you'd offer to people you're lending funds to.
Right.
Right.
And so we don't have to. So
exactly.
they don't have to borrow us. Yeah, it could
service.
be. And many times it is. And the thing is, it's business owners may have a lot of cash on hand. They don't know how to use it, or they want to grow the business. And so I had a recent conversation with a business owner. He wants to grow the business, but he doesn't think he can have the same amount of consistent output each time. Like if he grows the business from 10 to 15 to 20.
Yeah.
And so we're bringing in the procedures to, okay, how can you make a consistent process so you have the same amount of inputs to then result in the same amount of outputs? So that as you grow the business, as you continue to expand, that your clients are happy, your customers are happy. It's still like the day one service when you were running the business all by yourself, but now there's 30, 40 employees under you, right? So how can you continue to give that same service to those clients over that growth period, right?
That is very interesting. Okay, that's
that's
not what I was expecting, but that's awesome.
And to add to that, like we've had clients that come to us asking for working capital. That's, for example, like I had one client looking for a few $100,000 working capital. When we started peeling back the layers, we realized it wasn't a working capital issue. It wasn't that receivables or payables were tight. It was an issue with the amount of output, the consistency, and the waste the client was having. So when that conversation led into like a plant walk and we reviewed the plant layout, we realized it was a plant layout issue when an employee was moving from this side to that side to now back to point one. Why is there so many movements? Why is this so inefficient? So we ended up doing a plant layout for that client, and the client didn't need the working capital injection anymore. They realized they were more efficient in their process, more consistent, less waste. They weren't. So now you don't need access to additional funds. So the leverage of how leveraged the financial statements are and how much debt you need to take on reduces, and everyone's happy. Your accountant's happy, your banker's happy, your lawyer's happy, your fees are less.
Government's happy, government's more taxes.
Exactly. So at the end of the day, that's what it is. It's helping the business and making them more efficient, or having a great goal and getting them to that unified goal, right?
Okay. No, that's awesome.
That's really cool
That's awesome. And in today's, I mean, obviously we're in flux, it feels, with business and everything that's happening now. What do you see as the trends or challenges that we, like from a BDC standpoint, like because obviously with tariffs and the interest rate environment and the economy and all these things happening, like what opportunities or challenges are you seeing right now that
There's definitely challenges in the market, and there is opportunities as well. So challenges, there's a lot of, you could say, slowdown in the market. Customers aren't looking to spend as much money, and that results in businesses don't want to spend as much money. So, every business is sort of reviewing their budgets and reviewing their marketing and reviewing their spend. Do we really have to do these things to continue to be profitable with the reduction in sales, right? Things I'd say are looking better, and the reason is, Bank of Canada reduced the rate to 2.25, and that's more or less, you could say, the neutral rate, because inflation's around 2.2%. So if they keep the rate, which is likely they would, at 2.25, I mean, they can match that inflation level and continue to sort of target inflation.
Okay.
The other item is people are scared. People, you can sense it, and even especially in real estate, people. Even in residential, people don't want to buy homes.
Just buying
rates have come down, and so a lot of times you can gauge how individuals are, and that sort of correlates into the business realm. Because if people are scared to spend on buying a house, which is, you could say, one of the most secured investments an individual can make when it comes to as an individual buying a house and growing your family and so on. If people are scared to do that, then they're scared to spend money elsewhere. They're reducing their groceries and so on. But on a business level, individuals are spending less on these businesses, and so businesses, you could see their sales going down, right? Overall, I think the banks, overall are tighter and more difficult to sort of get money out of, and that's not because of overall the scheme of being more restrictive. It's more or less when you get financial statements and you're reviewing them, a lot of clients, they can't afford this type of debt anymore, and they can't afford a growth right now. Maybe it's a year where you maintain the business and you get through these current challenges, and then maybe next year we look at expanding and growing the business. right now may not be the best time for all business, but there are some businesses that, if some are being impacted by tariffs, but some are under, still fine within Kuzma.
Yeah.
And so if you're fine under the Kuzma, you're not being impacted. I've seen statements of clients that are continuing growing 30, 40, 50%, and some clients that are down 20, 30, 40%. So you see both sides of it, right? Some are being impacted, some are not being impacted. Some are using, loopholes to get to the United States, maybe selling to subsidiaries, selling raw products and so on. So like they're working with their accountants to figure out ways to get through and sell to those markets. But there is a lot of, you could say, fear in the market. And
what about opportunities?
There's definitely, if it's a buyer's opportunity. So businesses that are doing well and continue to do well and have that cash flow, it's their market to come out and say, hey, let's acquire some businesses. Hey, let's buy some buildings. Hey, let's look at some investment properties. Yeah. And we're still busy, and we're we could say we're busier now than we were 6 months ago, right?
People, when you have money, this is the perfect time.
Perfect time, right? Yeah. So when people and the general public is afraid, there's people out there making investment decisions, buying businesses, buying buildings, spending millions of dollars to continue to expand the business, to grow the business. And you sort of have to get out of that perspective where you're afraid and, market could crash and things could happen and turn into, okay, where are the opportunities? Where could I, put my money? Where could I expand and continue to grow my business? And a lot of things we're doing is helping clients focus on productivity and efficiency. If, you're having issues with hiring and, growing the business, maybe it's time to bring in AI or look at how can we be more productive in this business, right?
Professional, reliable, local. DORE Property Management has been Ottawa's choice for 20 plus years. Call 613-227-0000 or visit dorerentals.com.
We're going through a whole section on that. Yeah.
Okay, nice. Yeah. And so it's important because if an individual can use AI, they can do the job of 1.5 people now or 2 people. And so now you don't need to hire 2 people. Now this person can do X amount of responsibilities instead of what they used to do, right? So the productivity, I'd say, is the number one focus when it comes to times like these when you could say...
Yeah, and I think we're right in it. There's varying degrees of thinking on this, but with AI in small business world, almost feels like you're if you're not taking advantage of implementing certain strategies right now, you'll be left in the dirt in a few years.
Oh, for sure. Yeah, and that's the thing.
It'd be hard to catch up because
And that's the thing, like my personal opinion, like we have a lot of competitors down south and they're much more technologically advanced than we are.
Okay.
And so to have competitors down south that are competitive and have the ability to come in this market and start buying up, you have to be careful because especially in a market like this, we don't want to sell to, like if you had a business, you don't want to sell to a US competitor, right?
No,
you want to keep everything Canadian.
Of course.
And so it's about focusing on that productivity, that development, to continue to grow the business, make it more efficient, make it more of a well-oiled machine continuously, right?
This is interesting. This is the one thing I wasn't expecting out of this, whereas that whole advisory aspect I think is phenomenal. You make me think. That's awesome. And so from a BDC standpoint, the major difference is if somebody is looking at, purchasing an asset or growing, you mentioned at certain times, well, sometimes it's better for chartered bank to take it versus you. Like what if somebody listening to this is listening and say, okay, if I'm looking at expanding or buying, commercial asset or buying for an end user, I want to build my business, like what questions should these people ask themselves before exploring either or?
Right. I think it's worth the opportunity to have both conversations with a banker and with BDC as to where they should work and see where each of the banks can more or less land, right?
Yeah. Because my understanding, if somebody's buying real estate from a chartered bank, commercial real estate for the most part, there's a substantial down payment that needs to be put on.
So a lot of times it's, again, 75% low, there's loan to value, you're putting in 25%. But when it comes to BDC or more, and so it could change. So BDC really depends on the business's ability to demonstrate that cash flow to pay a certain amount. So it could, like you've seen our ads online, BDC could do up to 100% loan to value on certain commercial buildings. But again, it's very
1.25 at one point. Depending on the working capital, it's like Okay.
So
I
it
guess
really depends.
yeah.
It really depends on the business's ability to demonstrate that cash flow. To then, okay, if they're putting in this much, why aren't they putting a lot? Where is this cash flow going to be used? Where is this working capital going to be used? Can we do maybe 90% loan to value, 85? What's the condition of the building? Do they need to do renovations as soon as they move in? Do we need to set aside some money for that? Like, we think much more broadly than just this is a property, this is loan to value, this is cookie cutter. Like, there's more to it. Right.
Yeah.
And so,
absolutely.
and the benefit of having BDC on your side is we ask those questions and ask again, we ask the realtor and we ask the client, what do you think of this? What, like, when you move in, what changes will you have to make? What impacts does it make to your business moving there? Right. And so, is the plant layout efficient for you, or do you need assistance from the BDC to come in and say, we need to find an efficient plant layout? I'm moving from this plant to a new plant. How can I make this more efficient? What can I do in the process? So, and they're different realms.
So,
it really depends.
So you should explore both.
Explore both. We could do 75, 85, 90, and sometimes 100. Like, it really depends case by case, right? Yeah. Like, I can't sit here and say we're going to do 100%
no,
on
I
every.
Understand, but my understanding is, and you can correct me if I'm wrong.
Right.
But, I mean, obviously, somebody has to own the business.
Oh, for sure.
It's not, you're not, and then two is the performance of the business has a larger impact, say, than your typical lender will look at the assets performance.
Right.
But whereas BDC seems to put a lot more effort
in the statements and the cash flow, absolutely,
right.
And that's the number one priority for us. Is this consistent cash flow? Is the consistent business? Have they shown periods of consistently making money? How are they managing their expenses? And so there's so much more that goes into it, but we definitely like to provide more of a holistic look as to the loan to value. And a lot of times we like going into the higher end, and we like being a bit more leveraged, and that's where BDC sits. And that's where our specialty, and that's where that's where our demographic.
So if somebody has a business and they buy a stabilized commercial asset, is the security on the asset or on the business?
So it's on both. So the security would be on the property, and then it would be guaranteed by the business.
Okay.
Right. Okay. So
fair enough. I mean, obviously, I find it fascinating because my limited, and I'm forthcoming with my experience with this is limited. Do you have a client story you can share that without going into the exact specifics of how BDC actually helped them? I mean, you mentioned very quickly a few there, but one that you could highlight to say, this is what happened. These were the avenues, and next thing we got involved, and this is what the opportunities got created.
Yeah, for sure. No, recently one of my clients, they owned a commercial property, and they were looking to refinance the commercial mortgage, take some equity out, and continue to sort of expand their personal portfolio. So take money out of the commercial and put it towards more or less an expansion. So you could say real estate or it could be more commercial real estate, personal. But in this situation, he wanted to spend it on, more residential real estate, which BDC doesn't take a part of. So what we did is we took a charge on the commercial property. We did a refinance and equity takeout of up to 90% loan to value. His mortgage was only 50%. So 50%, so we refinanced the current lender and gave him additional 40%. Then take that cash out, use it on your personal investment. But he had that business that demonstrated that consistent cash flow to pay the 90% loan to value loan on that property, right? And the property was new enough, is recently built, and had certain criteria where we could say, okay, the lifespan of this property could be another 50 years. So if you put a mortgage on it for 25, we should be in a well positioned in case anything happens, right? So there's certain things we took a look at, but we were able to then give this individual access to additional working capital that he could use towards growing his personal portfolio, building his retirement portfolio, buying investment properties, and sort of expanding his reach there. Okay. Because his whole focus was this business. Right?
Because you didn't dictate where those funds were being used.
Exactly. Since we did,
if you're obviously using it to fund his personal retirement account, you're not worried about where the funds are going. You're actually just
exactly. We looked at that. That's the specialty of our equity takeout. We don't want to be more or less associated with the money that's going out. We just don't want it to go into maybe illegal situations or things like that, or where we don't want to be a part of. But if it's high level, if we know where it's going to be spent, we know the business plan behind it, and we're comfortable with that. We're fine with doing an equity takeout against that real estate, against that property, that for them to then start to continue because for business owners, a lot of times the business is their baby. That's all they focus on. That's all they're working on. And over the span of 20 years, you realize, oh, I didn't really grow anything else. Like, this is the only thing I have. I want to more or less diversify, so my kids have more of a diversified sort of portfolio when, you know, you retire and you pass on those funds to them.
Yeah.
He wants to pass on the business and pass on other real estate holdings to the family, right? So there's so many different ways we help. Like, there's that side, there's the business growth side. There's so many different stories that we have with entrepreneurs. Even on the advisory side, like, we've helped businesses sort of figure out who they're targeting, and then now they're growing their business, right?
Yeah.
And so one of the advisors that we have on our end, he used to run his own business, and he took it from a startup where he just ran it himself to 4 locations and 99 employees. So that was amazing growth. But now he's an advisor for BDC.
No way.
So now he comes in and he gives advice to entrepreneurs that have retail and like they're looking to grow their sales, and he's giving them that advice. Like, hey,
who better to give advice than somebody who's done it? No, but it's true though.
Exactly.
Somebody's actually done it to be able to give advice.
And so when
it's fascinating.
And so when we have our advisors that we're looking to support entrepreneurs, we have so many different individuals we could pick from that, you know, support the BDC in these advisory projects and say, okay, this would be the best person to help you, or maybe this guy, or maybe this guy, like, or this lady. Like, we have a team that we can
choose from depending on what the need is.
Right. And so there's you could say more or less a copy and paste of me. So I would be on the financing side. We have a client partner on the advisory team that would help the client figure out, okay, this is the person you should work with, or this individual, put the team together, and then go continue to assist the client with those goals, right?
Yeah, that's awesome. That is awesome. And I feel like I could talk to you for another hour, but I'm here. I have to respect your time. Like, this is the questions are just popping up, but I'll ask them after. And one of the things we always like to do when we have these podcasts, we always ask, you know, who are the influencers? Who do you share? You know, who do you follow online? And you mentioned Jay Shetty as an influence, and I think that's great. I was just mentioning I haven't listened to his podcast in a while, but so what attracts you to Jay's content?
There's a few big things about Jay. Like, when you're in the conversation with him, and you're like, as a viewer, when I'm watching his podcast, he makes the individual with him feel very comfortable, and the type of responses he's giving to the individuals, it makes them feel comfortable. It allows him to share more. He has these subtle cues. He knows how he's doing the conversation on that podcast so well. Similar to you, you're doing a great job. Similar to Jay Shetty. And so he does a great job. He's very attentive, and he knows,
gets absorbed,
and he cares. And another big thing is he mentions this topic about intentionality. And intentionality is important because when you have an intention to pursue something, or to do something, or to acquire something, and you do it with intention behind it, and whether that's to grow the business, and you do it with intention, you have a team supporting you, have people supporting, the likelihood of you accomplishing that goal increases substantially. And so I like to use that intentionality with anything that I do. Am I doing this with intention? What's the purpose behind it? How can this help me? How can I help them? Like, what can I do? And especially in business, I think that's important, because for business owners and for people who help business owners, we don't have a lot of time on our hands. There's so many individuals we're helping. There's so many things we're doing. We're always on the go. We need to be very intentful with how we pursue and how we go through our days, and very specific on how we can help and how we can provide that value, right? And I think Jay does a really good job of explaining that and sharing that. That's a really good thing I like about Jay, and I continue to watch his podcast.
No, it's good. Yeah, the intentionality in everything we do. I think that's if everybody could realize that. I think most people don't, but when you realize that, when you have the right intentions and you just keep, you know, putting action behind it, at some point, you should stick to it long enough.
100%. And you're not running. You're not running on autopilot. You're not just doing the things as a zombie. You're there intentfully. You're listening. You care about the individual sitting across from the table. You're like, how can I help you? How can I provide this service? And you do it with that feeling and that support within inside of you. You do more, and the client feels it, and they feel supported and well situated. So
I get this. I don't know you a lot, but obviously I can sense that, you know, somebody who's dealing with you would get that from you. So kudos to you.
Thank you so much, Dan. I appreciate that.
No, that's awesome.
That's awesome. Yeah.
So, Shay, thank you for joining me today. This was a fun chat.
Thank you.
Like I said, I feel like it could go on, but Michael slapped me if I continue. So.
Oh, that's good. Thank you so much for having me. It's a pleasure to be here, and I've watched your podcast. They're great. Lots of informative information.
Thank you.
And very great individuals you have on the podcast.
Yeah, no, when we look forward, I mean, we always look to have conversations with people who are making a difference, people who are involved. And, you know, this isn't about just random views or anything like that.
Exactly.
It's genuinely talking to people people who we're in real estate for the most part.
Exactly.
And anybody that's in Ottawa that, you know, deals in the core real estate, whether you're servicing, you own, you invest, you develop, whatever it is.
Right.
We like to have those conversations. We all benefit. We're in an ecosystem where we
100%.
all win from doing
100%.
that, right? So
it's a small ecosystem. We got to help each other. Right?
Exactly. And so for anybody that's looking to reach out to you, like, what's the best way to reach out to you?
It'd be my email.
Okay.
So it's Shay.Faisal, so first name dot last name at BDC.ca. So feel free to reach out. And
so
we can
Mike, you put that in the
thank you so much. Yeah, and they can reach out over email, and we can connect. And I look forward to helping them out or directing them in the right space possible, whichever team can help them out best.
Yeah.
Feel free to reach out.
No, that's great. So to all the listeners, thank you for tuning in to another episode of the DORE Podcast. So don't forget to subscribe and turn on your notifications so you never miss a good conversation. I'm Dan Dore, and see you on the next podcast.
Thanks for tuning in to another episode of the DORE Podcast. If you're an entrepreneur or investor focused on real estate in Ottawa, we want to hear from you. Apply to be a guest and check out our video content anytime on YouTube.